For Deepwater Asset Management, I'm Gene Munster. The topic today is why Tesla is the winner in United Auto Workers negotiations.
In the Tesla community, it would be quite common to hear the question nowadays of why are the shares of Ford, GM, and Stellantis going up since the UAW strike started, and all the while Tesla stock is going down? On the surface, the question's popularity makes sense. You have dozens of automotive factories and assembly plants out of commission for a week now due to the strike of the UAW. Now, I should say up front that no one with pure accuracy can predict price movement, but I think it would be a healthy conversation to have and worthwhile to explore. You've heard it all over the news, something akin to the line of, Tesla is the only beneficiary of the UAW strikes. And yet, from the day the strike started to September 22nd, 1 week later, you couldn't even tell a strike at the big three auto manufacturers is even underway. Actually, if you look at this chart and showed it to a person who doesn't follow the markets or the finance news cycle and asked them, identify the company or companies whose workers have walked out due to a strike that started a week ago, they'd probably pick Tesla on price action alone. The thing is though, the constrained time frame I'm showing you is part of the problem. If we zoom out, we can start piecing together a story of how legacy automotive is outperforming Tesla's stock. Let's take a look at the stocks without Tesla's chart on it. This chart is showing a larger time frame, starting from the May of this year to present day. The chart might look familiar. The reason for that is just like how our Tesla stock ran up into the summer, so did the other automotive stocks. In this third chart, I added a blue vertical line. This line represents the date of the start of formal negotiations with the big three automotive companies and the UAW. Though it's called formal, the real negotiations didn't start until 2 to 4 days later. Based off this line alone, you might start to understand what is happening. You've heard the saying, buy the rumor, sell the news? This is the beginning of the sell the news type of event, but the sell isn't too severe, just a slight de-risking. Let's go to the next chart. In the fourth chart, take a look at the yellow line, which represents Tesla. I wanted to establish that Tesla did not move down at this time, unlike the other three automakers. For the fifth chart, I wanted to further establish that the automakers are diverging not just from Tesla, but from the main indices as well. The S&P 500 represented in yellow, and the Nasdaq represented in purple. Both have trends to the upside. Even as weakness of August begins to show, the market is more resilient than the big three. In the sixth chart, my intent is to show that there are some variations between the automakers themselves, some of which is caused by their earnings reports coming in shortly after the beginning of the UAW negotiations. These reports definitely didn't help those negotiations though, as they showed billions of dollars in profit, which eventually helped the UAW's Shawn Fain craft a slogan that went, record profits, record contracts. For the next chart, chart 7, I clarify the strength that Stellantis shows compared to GM and Ford is due to a better received earnings report. Stellantis is a multinational conglomerate with a good deal of earnings outside the United States because of the many European brands under its umbrella, whereas GM and Ford have the vast majority of their profits related to sales in North America. The price action reflects the outsized vulnerability due to the exposure in the US. Chart 8 is when the interesting bits of the story come to pass. On the 8th of August, a story comes out describing the breakdown in negotiations between Stellantis and the UAW. Famously, Shawn Fain was quoted that he threw the Stellantis offer in the trash. Fearing the same breakdown was occurring with GM and Ford, the market reacted harshly, but recovered the next day. On the 10th of August, Axios publishes an article that they hear on the grapevine that a strike may indeed occur, and Stellantis could be the one made an example of. A strong sell-off ensues, quickly and fiercely. I want to use this chart also to make light of an idea that might have helped start the sell-off just after the negotiations originally started. And it has to do with Axios again. A few days ago, the Detroit Free Press and Axios were given leaked private messages that were sent between the top brass of the UAW, and it broadly discussed the game plan for the negotiations and strike. The messages weren't dated as far as I know, but here's one of the published texts. If we can keep them wounded for months, they don't know what to do. This is recurring reputations damage and operations chaos. There was another text, and it said, the beauty is we've laid it out all in public, and they're still helpless to stop it. The idea I'm getting at is during the negotiations, and even at the start of them, the UAW was not a genuine participant. I'm sure the negotiators on both sides started to understand that a strike was ultimately likely to happen. As the days went on, insiders were slowly selling off the stock until it came to that crescendo on the 8th of August. As the end of the contract drew near, the average market participant was betting on the strike happening, but many who weren't following the stocks didn't quite grasp how much they had fallen by the time the contract expired. Tesla shareholders especially didn't understand the price action, with the big three rising or at least staying flat, as Tesla continually sold off. So if the formal negotiations was a sell the news type of event, when does the other part of the saying begin, or has it begun already? Is someone buying the rumor yet? We'll eventually find out, but let's move on to the next chart. In this ninth chart, we'll use the opportunity to show how the S&P 500 and Tesla are doing compared to the automakers. If you're a Tesla shareholder, you probably know full well that we are in the midst of a massive sell-off, not sparked by the UAW, but instead by the reaction to our earnings report in July. The Tesla sell-off did not coincide with any selling in the Big Three, nor the S&P 500, so Tesla did not affect their price action. The S&P 500 did not budge as the automakers started to sell, so their move down was strictly isolated to themselves. In chart 10, I show the maximum drawdowns in the share price of the Big Three. Stellantis falling just 14.7% before the bottom, whilst GM bottomed after a 22% drop, and Ford fell slightly further to 25%. Now, there isn't much to compare to when it comes to previous strikes. They're actually relatively rare in the industry now. But back in 2019, there was a GM-centered strike that lasted a little over a month. Here in chart 11, you can see the max drawdown for the 2019 GM strike. It was 13% before recovering in a few weeks. That strike was not front-run like the strike we're experiencing now. The reason for that could have been the quick move to strike after the contract ended. Just a day or so, whereas the previous GM strike in 2007 had extensions to the deadlines due to the UAW feeling negotiations were going well. Perhaps in 2019, GM investors believed it would proceed in a similar fashion. Instead, they were shocked by a Saturday morning strike announcement, causing a gap down in the share price the following Monday. So knowing this, can we say a 15 to 25% drawdown is a fair de-risking for the Big Three in 2023 strike? For Tesla shareholders, there's a feeling that the legacy auto companies are outperforming their Tesla stock. And the easy answer to that is, yeah. But it might have to do more with how Tesla is underperforming them and really the rest of the market in its entirety. From the lows, Stellantis has rallied 10%, GM just 1.7%, and Ford 7.4%. We understand that Stellantis doesn't have the same exposure to the United States like the other two companies, so the stronger rally makes sense. For Ford, it was announced this past week that negotiations are going well and no further strikes have been announced for Ford facilities as of September 23rd. Unlike GM and Stellantis though, they've had strikes against them expanded. GM has hardly rallied compared to Ford or Stellantis, but I can understand why many Tesla shareholders feel that it has rallied more. If you know much about technical analysis and are looking at these tickers for the first time, you probably immediately see a pattern you would buy. The Ford and GM charts look to have made very typical double bottoms, whereas Stellantis' chart could have sprung upwards without a double bottom like its compatriots. I think some of the upwards movement in these names are just traders trying to capitalize on oversold stocks. For the last chart, I wanted to help my fellow Tesla shareholders understand that from a bigger time frame, Tesla has not been doing very well, especially in comparison to the other car makers. I chose to begin the time frame last year in March before the Twitter announcement to try to make it as fair as possible for us Tesla folks. But even with this time frame, our performance looks quite poor when comped to Stellantis. And as for Ford and GM, they're both just 20-ish% below Tesla. You'd probably would have expected a larger gap in our favor. I hope this puts things in perspective. The market just doesn't see Tesla how we see it.